Hello, everyone. Thank you for joining us for today's webinar, Program Finance, How Deltek Solutions Help Project Controllers Manage Their Port. I'm Kim Woodcock, an events coordinator here at Deltek. And before we begin, I have a few administrative items to note. As audio streams through your computer speakers, all attendee lines are muted. However, if you have a question during the course of the webinar, just type it in the Q&A panel of your screen at any time, and we will be sure to address it at the end of the webinar as time permits, or follow up with you offline if we run out of time. There are resources, including the presentation slides, for you to download in the resources panel of your screen, and you will also receive the on-demand recording of this webinar via email within 24 hours. And now I would like to introduce our speaker for today's presentation. Joining me today is Phong Starzewski, partner at Kinetek. Welcome, Phong.
Thanks, Kim. Well, good morning, everybody. I see we've got a fairly large crowd that showed up for this webinar today, and I see more than a few names that are near and dear to me, so thanks for coming to them, and thank you all for being here. Okay, well, why don't we get started? Today's webinar is titled Program Finance, How Deltek Solutions Help Project Controllers Manage Their Portfolios, as we see here. As many of you know, Deltek has a wide variety of solutions for all kinds of industries. And today's webinar will focus on Costpoint and the related applications that really kind of focus and cater towards the GovCon space. So just a little about me before we get started. My name obviously is Phong Starzewski. I'm a partner with Kinetek, which is a consulting and software solutions firm founded in 2002 to help customers not unlike yourselves improve their financial performance. Our firm is a partner with both Deltek and IBM. And in the Deltek space, we're a GovCon partner with over 200 customers that span a wide variety of industries, be it defense or homeland security or healthcare management, aviation, social marketing. Those are just to name a few. And on our IBM partnership side, we're really centered around IBM Analytics, which encompasses everything from business intelligence to analysis and planning and forecasting. At Kinetek, I wear a couple of hats. First and foremost, I'm the practice leader for Kinetek's FP&A group, so I lead a team that develops and implements off-the-shelf solutions for planning and forecasting. And secondly, I'm one of the practice leaders for our F&A group, which implements and consults on Deltek, Costpoint, and related applications. My background is in finance with a systems focus. I began my career back in the 90s as a financial analyst with one of the Beltway bandits here in the DC metro area. And from there, I moved on to be a controller at a professional services firm before moving to work as a systems consultant for Deltek actually for a while, and then finally landing at Kinetek in 2003. Over the course of my career, I've had the luxury or the opportunity to be part of the program finance evolution, if you will. First as a participant, and then for the past 20 years as an advocate and a solutions provider for companies that lean more and more on program finance professionals to manage their business. So that is it for me, and I like to start things off with a quote. So I dug one up here that I thought would be useful for this presentation. The CFO has become a technology evangelist as a result of changes in the business model. This is from Gary Simon of FSN Publishing. So why did I choose this quote? Well, as the title of this webinar suggests, we are here to learn how Deltek Solutions helps program finance. And while program finance can and does exist in different groups at different organizations, some could be directly within the finance and accounting departments, others can be embedded in operations and report up through that chain. What's pretty clear is that regardless of where it is within your organization, the CFO probably has a heavy influence in terms of what program finance needs to do and does do. And as we'll see, the CFOs become increasingly influential in the solutions that program finance professionals need to do their job. So really what I'm trying to say here is that the CFO dictates a lot of what we do. The CFO also controls the purse strings and has been as we're seeing more and more in the marketplace, much more interested in the technologies that are available for companies to manage their financial portfolios better. So I think that's helpful for all of us. So why are we here? We're here because there's stiff competition in the marketplace, and in the GovCon space in particular, the effects of the sequestration are still felt today. The federal government has increasingly looked to its contractors and suppliers to do more with less. And companies that have thrived are those that have learned how to operate more efficiently, which reflects itself on the bottom line. This may include process improvements, technology, or oftentimes both. Organizations are actively seeking new ways to capture value throughout their organization to help win and retain business and grow the bottom line. All facets of the organization are in play, not just operations, not just business development, but from human resource management, administration, and even finance. CFOs have an ever-increasing role in the success of the organization, and particularly being able to respond to the changing market conditions. In order to make companies more agile, they are embracing technology more than they have in the past. However, while customer engagement solutions have taken a front seat in technology spending, the back office solutions, the ones that we really need as program finance professionals, those have historically lagged behind. But what we're seeing in trends lately, and this is probably over the past 2 or 3 years, is that CFOs are taking more and more notice. Over the past 5 years, Gartner has been conducting a survey, in fact, asking CFOs where there's room for technology improvements, and the results always come back the same. They're always saying pretty much the same 3 things. We want to look at business intelligence, we want to look at analytics, and we want to look at performance management solutions. Those are always at the top of the list. But in the same study, Gartner also found that the CFO ranked the needs for improved business applications in finance, like, say, things like ERP systems and that type of thing. They actually ranked those higher by a 14% margin than the need for analytics and business intelligence and performance management. So there's kind of a disconnect there. While CFOs are acknowledging, hey, we need these other tools, they're also in the next breath saying, well, we're actually spending the money somewhere else. And so I think there's really 2 things that are at play here when we see this, what kind of looks like a contradiction in terms. It probably really isn't. I think, number one, what CFOs are realizing is that in order to become more agile and in order to unlock more of the value within the organization and capture that in the market, they need to be able to have better control over their finances. So they really are looking at the business solutions to provide kind of a platform, like a standardized platform from which then they can put their business intelligence, analytics, and performance management solutions on top of. And number 2, as we're going to kind of see today, solutions providers like Deltek are increasingly embedding or bolting on analytics as part of their offering. So it's kind of like killing 2 birds with 1 stone. I want the business application, but along with that, we're also seeing that we're getting inherent analytics with it, which is good. I think that solutions providers, specifically Deltek, understanding that and responding to that can only help its customers like you. Okay. One of the things I did want to point out is that we see that from an influence perspective, there is an importance of technology or acknowledgement of an importance of technology to the point where you see in today's market about 50% of CIOs and CTOs actually report directly to the CFO. So that's kind of, giving us a benchmark of, the CFO's influence on the whole application or infrastructure. And then another 25% on top of that have a dotted line to the CFO. So the CFO really influences about 75% of the technology C-suite in organizations across the country. Okay, so why do I care about any of this stuff? Well, I care for a couple of reasons. We care because management, and particularly the CFO, is applying downward pressure on program finance to provide more, to help maximize revenues and improve profitability by controlling costs, by maximizing resource utilization, and reducing DSO, which in turn should lead to improved cash flow. And to reduce DSO, we need to invoice faster. And to invoice faster, we need to get our costs faster and more accurately. And to get our costs faster and more accurately, we need to have better controls in place. And to have better controls, we need to see what is going on. The demands of your job as a program finance professional are exceeding the bandwidth that you have to perform. So you're here, we're all here, because we know that there are things that are out there that can help us. We just might not necessarily know what they are. Some of them, may be new applications, or some of them we may already own and we just don't know that they're there. So let's talk a little bit about the program finance role, and I'm going to kind of give you my definition of where I've seen it, again, first from sort of growing up in it, and then secondly from being an advocate and a consultant with different organizations like yourselves over the past 20 or so years. So back in the day, when we kind of looked historically about corporate finances in general, you'd typically see a billing department, an AR department, a payroll department, and all of these other departments, and they kind of operated out of what I'll call the dark back office. We didn't really know who they were, what they did. We just got a paycheck, and we knew that invoices were getting sent out. And while we still have those types of roles today, or those types of departments or functions, what we're seeing is sort of a shift in terms of how that's being managed. We're seeing more transparency in processes, and we're seeing that with the sort of the advent and evolution of program finance. When we see, and the reason for that is because we're seeing that customers are increasing their demands of their suppliers, particularly if we're talking about the GovCon space, the federal government. They're increasing, they want more. They're always going to want more for less. And their contracts are coming with more and more complexity and more scrutiny along with that. So we're seeing contracts now that take on new and interesting mechanisms to earn a dollar. I mean, cost plus, T&M, and firm fixed price were all we knew in the past. Now we have interesting new contract vehicles. We've got T&Ms that have indirect rate caps, so you kind of get the best of both worlds of T&M and the cost plus. We've got cost plus with no plus sometimes, which is, I kind of chuckle about that. And then we've got the ever popular hybrid, as I say in air quotes, this sort of combination of everything we used to do, plus some new and painful scenarios added on top just to spice things up. So along with these different contract vehicles, there also comes the added scrutiny of the customer invoice. Costs are being challenged at an increasing and sometimes alarming rate. Payments are being held in total for what used to be immaterial amounts. Yet the pressure on the entire organization to get bills out faster, get paid quicker, that keeps growing. That doesn't stop. Because of this, program finance has taken on a much more visible role, and that's probably a good thing. We need to know our contract like we wrote it. We're being asked for our opinion or our concurrence or our direction to define the project structures, the WBS, the revenue, the billing, so forth, everything that we need to get the project up and running. We're being asked to provide budgets and forecasts for our programs. We're being tasked to review costs for accuracy, ensure that revenue is recognized properly, verify the customer invoice, and yes, even pull backup, as I've seen at various companies. And we need to continually monitor our programs to make adjustments or recommend course corrections if it looks like we're running out of money too quickly, or we won't otherwise meet our program finance obligations. So what now? Well, I've laid the groundwork with my definition of the program finance manager, or the project controller, and I'll use these terms interchangeably as we go through probably the remainder of this webinar. But what's out there to help do all of this? According to a report from the Financial Executives Research Foundation and Oracle, CFOs are adopting best practices to make companies more agile with the ability to respond to changes in market conditions faster than before by utilizing technology that allows for better control and more transparency and timeliness. The report came up with these 5 general processes where their improvements were made. As we'll see, many of these process improvements come down to a small core of unified threads, and we'll kind of see how things tie together as we go through these. But the 5 main processes that were identified for best practices, if you will, were in the area of report and comply, measure and respond, plan and predict, procure to pay, and then last but not least, project financial management. So what do all of these things mean? Well, let's take each one of them individually. Starting with report and comply, this process thread really involves your typical core accounting. So you've got your general ledger accounting functions, you've got your month-end close, your management reporting, statutory consolidations, your external reporting, and then your tax and regulatory compliance. So in this area, first and foremost, what the report identifies was the need to adopt a modern technology-enabled close process. Of all things, close process, right, was the first thing that was looked at. But by reducing or eliminating manual processes and working multiple functions in parallel, so we don't have to kind of sequentially do things one after the other, we can divide and conquer. Companies can close faster, and when they do close faster, they can report quicker, and they can redeploy the resources that they have available to them to more value-added functions. In addition to this, there were a couple of other points that I didn't write down on this slide, but they're worth noting. One is speed, right-time decision-making using standardized processes and a strong data governance model. And really what they were saying here was, well, number one, we need to be doing things the same way, standardization, standardization, standardization. I didn't put it here because we're actually going to see it in other areas where that same type of theme has arisen. And number two, we need to have a data model that is consistent. It's our single source of truth, and that everybody is managing to. We'll actually also see that in some other areas around here that are more near and dear to us with particular regard to this webinar. The next area or process thread is measure and respond. And really what we're talking about here are things like analysis, like profitability analysis, performance management, whether you want to call that business performance management or corporate performance management, however that works for you. Risk management, cash flow, cost management, and internal controls. And in this particular area, the 2 points that I noted or that I thought were interesting were this first bullet here, ensure that everyone is making decisions based on the same source of high-quality data, okay, which is something that I had mentioned just in this previous section, but I wanted to put it here. So the same source of high-quality data. So it's not just that we've got data, and it's not just that everybody is looking at the same data. It's that they're looking at high-quality data. And what does that mean? Well, number one, it means that it's useful for making decisions that I need to make to run my programs efficiently from a finance perspective. Okay, so I'm not interested in a lot of numbers. I'm interested in the right numbers. So that's really what we're talking about there with high-quality data. And then secondly, I want to make sure that everybody is looking at that same data. Like that, what I'm looking at my level in program finance is the same thing that the corporate controller is looking at from a different purview, and it's the same thing that my peers who are other program finance professionals are looking at, and program managers are looking at, and ultimately the CFO is looking at. We're all singing off the same sheet of music. So that's particularly important in any organization when we're talking about reporting and analytics. And number three, there was a point that I didn't put on here, but it was really to invest in the right decision to deliver information to the decision makers. So, it's not just about buying a tool, but it's about buying the right tool or building it, as the case may be. The third process stream that we talk about is plan and predict, and really what we're talking about here is budgeting and forecasting. Okay, this is probably an area that I could talk about all day because of my my hat at Kinetek as being the practice lead for FP&A and the solutions we have. I'm not going to dig deep into it today, however, because there's a lot of other things that I think we can talk about. But suffice it to say that these three core best practices that are listed in this report are the same three core best practices that we preach at Kinetek and that we've seen everywhere else in the marketplace. And number one, you want to get rid of the spreadsheets. When we're talking about doing our planning and forecasting, we want to get rid of the spreadsheets. We want to have modern planning applications that are enterprise-wide and allow us to collaborate, which leads to number two, why do we want enterprise-wide applications? It's because we want to put the planning process in the hands of the people that know. Or as this report so eloquently puts it, exploits the wisdom of crowds. And number three, we want to be able to adopt driver-based rolling forecasts. So we don't want to get in a situation where we have to continually every month forecast every dollar of cost, but maybe be able to forecast based on certain conditions that are met, which will help facilitate the process. And that takes time. You need to have a historical benchmark for that. You need to know what your business is. You need to know, how things are the same and how things are different, so you can apply what you know in the past to predict the future. In the procure-to-pay area, we're really talking about all of our subcontracts work, all of our vendor management, all of our accounts payables, and that kind of thing. There are some points that the report brings out, like implementing self-service procurement and streamlining purchasing. We're really not going to get into any of that today. We're sort of tangentially interested in the procure-to-pay process because obviously we interface a lot with subcontractors, and as we'll see as we go through this presentation, we are getting pressure to start to contribute to improving DSO, which also involves payables. But for today's conversation, we're gonna defer that and leave that for another day. And then lastly, but not leastly, there's our project financial management thread. Okay, so this set of processes is everything we know. It's costing, it's budgeting, it's forecasting, it's contracts and billing, it's project control, and it's project performance reporting. Okay, these are the areas we know well. If we're a program finance professionals, this is what we do. And this report is a bit of a validation of what we already know. So in this area, what the report identified were a number of things in terms of best practices. Number one, we should use analytics to proactively monitor the health of our projects. Absolutely right. Hopefully we are, but if we're not, we'll take a look at some things that we can do today. We should standardize our processes and data to ensure we have a single source of truth coming across the entire organization, and you see that as a recurring theme pretty much through a lot of these process threads. And number three, it did talk about delivering real-time information and the use of mobile. Now, obviously, we're in a different kind of business. I think real-time would be great, and I think in some areas, as we'll see, we can get some real-time information. But really what we're talking about is getting timely information in the hands of the right people to make the right decisions. And so we'll see how Deltek Solutions can help us with that. So how can Deltek Solutions help? Well, as we've seen, as one of the many underlying themes, we need to embrace the right technology to help us be more agile, to streamline, and to be transparent. We need systems that can help us manage costs and enforce our internal controls. And we need systems that provide a single source of truth with high-quality analytics capable of expanding to our needs and changing as we move into different markets. So in today's session, we'll take a look at some examples of how the following systems can help. First, we've got Costpoint, which is Deltek's flagship ERP for government contractors. And I'm going to guess, just based on the roles here, that everybody that's on this list is using Costpoint, so we're in good company to talk about that. Number two, we're going to talk a little bit about time and expense, which is used to enforce our timekeeping policy and monitor and record the activities of our biggest resource, which is our employees. We'll talk about Costpoint Enterprise Reporting, or CER, which is the business intelligence used offered by Deltek, which has a standard framework across Deltek data sources with some pre-built reports and room to grow. And then lastly, we'll take a look at CP Analytics, which offers a cross-platform analytics bundled into a single source of truth, and that's a lot of words to spit out at once. So we'll take a look at some pictures, and that'll add some clarity. Okay, so obviously we'll be talking about technology today. And some concepts might be advanced. The point of this particular webinar is not to be a training or how-to session on how to do specifically different things, but more to expose you to what you can do and what's out there for you, and really give you a little bit of ammunition to go back to the office and say, hey, you know what, we should probably be looking at X or Y, or hey, there's this functionality that exists right now, and we've got a real need here, and we see a real business value. Why don't we start taking a look into that? and sort of starting to influence the technology group within your organizations to leverage really this functionality to help you guys as program management professionals. Okay, so let's take a look at this point at each one of these process streams individually. So we've got report and comply, which is what we started out with. And this is really about adopting a modern technology-driven close process. Really, that was the number one best practice that was identified. And there was a good quote that I found that I wanted to put in here. And it's from Jeff Hanley, who's the vice chairman of the board and former CFO of Oracle. And he says, closing the books, reporting more efficiently, these are just table stakes for the modern CFO. You can't ask for a more strategic role in the organization if you can't deliver on the basics. And certainly closing the books is something that we would all consider as being, a foundation, like a must-do. Okay, so how can we help in this area? We can help in this area by reducing time to cost. Okay, and what do I mean by that? Well, what I mean by that is reducing the amount of time it takes your company to collect costs. This means that you can close the books quicker, and by extension, you can bill faster. Okay, so the sooner we get all of our labor posted in, the sooner we get all of our vendor invoices posted, the sooner we get all of our accruals in, the faster we're going to be able to allocate our costs and compute revenue and whatever it is else we need to do to get to close. And then by extension, then we can move on to billing much faster, right? Because a lot of times billing is predicated on certain close processes, service center allocations, things of that sort. Okay? Most of the organizations I see here today and work with in general stake their living on fees for service. So that means that really what we're talking about there is that our most precious resource is our people, right? We're billing labor. So we need to ensure that we can capture their labor quickly and accurately, that we can in turn invoice our customers with the same speed and the same accuracy. So our role in program finance often requires that we review and manage costs. So it's in our best interest to make sure that we do our best to get it right the first time, right? We don't have to go chasing people around because they charged an errant number. Then that's less time on time card corrections, less time for us to take to review the costs, and ultimately that leads to faster invoicing. Program finance is also being tasked with creating month-end accruals for program costs incurred and not yet booked. So if you've got subcontractor efforts that are going on, that historically subcontractors are, you get their invoices on a delay, a lag, so you'll inherently probably need to book their costs every month. So this involves knowledge of the contracts and keeping on top of those subs to get those, to understand what the costs are that are coming and when they're anticipated. Oftentimes this process is laborious. Sometimes there's no way to get the information except through collaboration with the subcontractor. But then there's also the process of getting that information in the cost points, so fashioning those accruals and getting it in there. So let's talk about a couple of these two scenarios here and what our solutions can provide for us that we already have. Okay, so if we're looking at Costpoint, let's talk about reducing timekeeping errors. Let's talk about maybe guiding people in a more structured path to charging their time. So Costpoint has this functionality called workforces in it. And basically what that means is I can identify people who are allowed to charge to my contract. However, I can't identify when they can charge to my contract. So the assignment is either John can charge to my contract for the rest of his life, or John can never charge to my contract. It's kind of an on or off thing. And that doesn't quite work out with the paradigm. Maybe I only want John to charge for 2 weeks, for the next 2 weeks or 4 weeks or 6 months, or for 6 months sometime down the road. So it would be nice if we would have the ability to have effective dates of when John could charge. So by using Costpoint's workforces and extending the application to include this period of performance, we can get halfway there. So now I can make assignments to my programs, and I can say when people can charge. And then what I do next is on the Deltek time and expense side, I create a custom signed save procedure that then reads from my extensibility and will do a validation against the period of time that somebody charges, not just the project and PLC, and will tell the employee whether or not that charge is valid based on their work authorization. So again, some small things here, you know, a little bit of technology. We already have Costpoint. We already have time and expense. We already have the ability to create some extensibility, which really just, you know, kind of expands the functionality of Costpoint to cater to our needs. We already have the ability to do custom signed save procedures in T&E, and I would say that most companies that have T&E have custom signed save procedures. So let's use that to streamline our processes and to reduce, and you know, I mean, we'll never eliminate timekeeping errors, but if we can reduce them with something like this, I think that's an easy and quick win for us. And again, from a program finance perspective, I think everybody would be happy to be in a situation where, you know, we didn't have to go chasing down time card corrections to get invoices out the door. The next piece of this, which is as boring as it could possibly get, is with regards to doing our month-end accruals. Right? Everywhere I go, it's the bane of everyone's existence. When I was in that position, it was the bane of my existence. So as I mentioned before, there's a lot of manual processes that go around getting to what numbers you want to accrue. I mean, certainly there's some information in Costpoint. Costpoint can generate commitments reports based on POs. Costpoint can even generate an accrual based on what the PO has less what's been vouchered. But the problem when we get into things like subcontractors, where we've got a PO that's maybe going to go on for a year, maybe it's going to go on for 2, 3, 4, whatever, 5 years, is that I can't sit there and accrue the entire PO for the remainder of the 5 years every month, because that's ridiculous. What I really want to accrue is the amount of cost in hours, if it's appropriate, that is equal to what I believe has been incurred or expended by the subcontractor in a particular month. So as a program finance professional, you end up getting or establishing relationships with the subcontractors that work in your programs. But then you also need to know what other costs are coming through. So if you have any other material costs that are coming through for, you know, materials for equipment, for whatever else it is, you need to make sure that you do the analysis to see if those costs were already booked, and if not, do the accrual as necessary. So kind of tangentially gets roped into the whole budgeting and forecasting process. However you get those numbers, then you've got the additional task of, now I need to get these numbers in the cost point, right? I need to book these accruals. And back in like traditional times, I think what you saw was, okay, well, I've got an entry that needs to be made to book this accrual, and I fill out a blue sheet of paper with charge codes, and I slap on the support behind it, and I staple it to it, and I send it off to cost accounting, and somebody in there pecks it in, and that's the end of the day. What we're seeing today, however, is that is kind of shifting. You're not really seeing cost accounting touch these accruals much anymore for program type accruals. Instead, they're pushing that to program control, program finance, and they're saying, you do it. You know, you get this together and you get it in the cost point. We'll review and approve to make sure that you have the appropriate backup, but you're the one that's going to actually get that entry in the cost point. So you have two choices. You can sit in front of a screen and enter in a journal entry. And, you know, if you've got a 2-line accrual, maybe that's probably the fastest answer. But if you're doing accruals that involve a multi-year contract, and you're in the base year of it, and it's got 200 CLINs, and you've got to do accruals across that, and you've got to do labor for a subcontractor workforce that has, you know, 50, 75, 100 people, well, it's probably not going to be very realistic for you to sit there and key punch that type of entry in the cost point. So there is functionality that's been in Costpoint forever to import journal entries. It used to be called a preprocessor. Now it's just import journal entries. What has happened in the latest release of Costpoint is that this particular function, or the validation specifically of this function, is a multi-user validation. So what does that mean? Well, it means that I can have 50, 100, however many program finance people I have in the screen simultaneously, validating that the journal entry file for the accruals that they're doing is valid before it's being posted. And then once I've ensured that all of the codes are valid, then I can submit that to a process queue for import. So what we're doing now is we're taking something that used to be a sequential process because only one person at a time could do this, or something where we had to build some sort of outside the application process to sort of handle rounding up all of our accruals together and then bunching them together and then processing them one time en masse. Now we've kind of distributed that work across our program finance pool of people who can work, again, simultaneously or concurrently as opposed to consecutively. So what we're doing there is we're saving time. We're getting to close faster. And again, if we can get to close faster, we can bill faster. And if we can bill faster, then we can get cash faster, and everybody's happy. So how do we improve the invoicing flow? I like to start it off where the one thing that I've seen that is really minor, it's a minor tweak that you can do in Costpoint, but that can help a great deal, is to take out the middleman with transaction review. So what do I mean by that? Well, what I'm seeing more and more is that in the program control world, it's the PCs that are responsible for reviewing the unposted transactions on a project, or excuse me, not the unposted, the unbilled transactions on a project, and identifying if there are any that cannot be billed. You know, we need to put these transactions on hold because they were miscoded and there need to be cost corrections done, or we can't bill these right now, so we need to hold just a block of costs here. And the traditional process for how that worked was somebody in the billing department would generate a report. That report would have all of my unbilled transactions on it. That report would then be distributed to program control. I would get that report. I would mark up the report with whatever I wanted to put on hold. I would have to send that back to the biller. The biller would go into Costpoint and put those amounts on hold. They would calculate the bill, and they would send me a draft invoice, pro forma invoice for me to review. And hopefully in that whole thing, everything got translated right. Well, what we're seeing happen today is that a lot of transactions are moving around. Sometimes a lot of things have to be put on hold, and quite frankly, there's error that's involved there. And so you may have the biller who may have missed some transactions, or maybe there was a miscommunication as to what exactly they were supposed to do with something, and so then that whole process needs to be repeated. And you typically, if you're repeating that process, then you can just add another day to when you can get that invoice out. So how can we speed up that process with the applications that we have today? Well, there is a function in Costpoint, Adjust OBD Records, which allows you to review en masse all of your transactions that have not been billed. And from within the screen, you can flag transactions to be put on hold. So if you can see down here, I've got this action where all these green checkboxes are with a hold flag against them. The screen's a great screen except for the fact that it also allows you to do other things. It also allows you to write off transactions. It also allows you to do cost transfers from directly within this application itself. And from a GovCon perspective, many of you probably follow the paradigm of if we're doing a cost correction, then we need to go back to the source record, which means that if I'm doing a timesheet correction, I need to go, if I'm doing a correction on time, I need to go back to the time card and do a timesheet correction. So the employee needs to do that. Perhaps if I'm doing expense type corrections, I may do journal entries for that, or I may do correcting vouchers for that. Those two things sometimes blend together. But what we don't want to do is have the ability to create journal entries from within this screen. This screen actually has the ability to do a number of actions. You can put a transaction on hold. You can remove it from hold. You can reset all transactions, so basically globally remove any change that you made to anything. You can write off transactions, and you can actually transfer transactions to another project, another org, another account, or any or all of those combined. So from a program finance perspective, the screen is great if we can just identify the transactions that we want to put on hold or release from hold. But we don't want to put the ability to do any transfers or write-offs in the hands of program finance through the screen, because we would have corporate governance and SOX issues with that. So what we can do in this screen is just use the security features, result set security and action security that are available in Costpoint 7 to basically block out those additional actions. So what you see here on the bottom of the screen is that these lines here, I tried to highlight and I tried to write them off, I tried to transfer them. And you'll notice that I got an error message that came back that says that I don't have rights to do the transfer. So again, kind of low-hanging fruit. It really just required a change in my particular security role to add that functionality in there. But what does it mean? Well, it means that I no longer have to play let me wait for my report from the billing folks that have my unbilled transactions that I then have to mark up, and then I have to then send back to them so that they then have to go through and one by one put things on hold or remove things from hold, which, again, is prone to error. And let me just cut out the middleman. I can see where the transactions are, and I can just go in there and put them on hold as part of my job because I have to do that anyways, whether I do it in this report or I do it online. So let's cut out the middleman and just get there quicker. Okay. So we have something that will help us get our invoices out the door faster. That'll help us lower our DSO, collect cash faster, and improve cash flows. I'm going to start moving a little bit more quickly here because I see I'm talking a lot. Another underlying principle is to standardize processes, and I put this in an asterisk. And the reason I put it in an asterisk is because when we talk about standardizing processes, we're talking about handling the same situations the same way. So if you can do that, then inherently you're maximizing the value of your resources because they're all equally equipped to handle the same situation, right? So if I have 3 people and they're all equally trained to do the same thing under the same scenario, well, then that means I can spread them across the spectrum. Like I'm not reliant on one particular individual to work with one particular program or to work on one particular situation. Standardization can take many forms. It could be in the standardization of processes. It can be in the standardization of codes or project setups. It can be a standardization of labor categories, orgs, et cetera. Okay, but I think there are a couple of driving principles here. Number one, standardization for the sake of standardization is pointless. So you really want to look at your processes and your across the spectrum of how you do things and the contracts that you have and the business that you do, and make sure that you have processes that fit that. So really try and mold into that. But we do need to realize that there may be situations where we just can't standardize. But we also need to, on the other side of the spectrum, we also need to realize that being different doesn't make you special. So just because you can do something different with your applications doesn't mean that you necessarily have to. So again, look for those synergies and drive that standardization where possible. Don't try and force a square peg into a round hole. Okay. So some of the standardization that we see are people that are organizations that standardize their project structures. And sometimes they standardize them across the enterprise. Sometimes they standardize them across particular lines of business or business units. Why? What did they get out of that? Well, if they have the ability to standardize and they don't lose anything in terms of customer invoicing or revenue recognition or customer reporting or internal reporting, then the value to standardization is, number one, you have really a transferable skill set, so you're better utilizing your resources internally because anybody can operate in the environment of standard. And number two, you can probably more quickly deploy analytics solutions because you have a standard structure and the structure means a certain thing. The last thing in Costpoint that I'll just briefly mention is job management. So there's the ability to do batch processing in Costpoint. I think you guys may be aware of that. If you're not, you should be doing it because you have month-end processes that are the same month after month after month, and there's no reason for somebody to be pushing all of those buttons. You should just have it on a schedule to run at whatever day it needs to run. Okay, let's move along. Let's talk about standardization of data. So this is where we get back to that recurring thread of the single source of truth and of high-quality data, as I've mentioned before, okay? Well, the first place we can stop, obviously, is Costpoint, and Costpoint has a number of project-rich reports in there. So we see the organizational cost summary, the project labor summary, the non-labor detail report, obviously the project status report, the revenue summary, revenue worksheet, and TNM analysis. I'm not going to get into those more specifically than giving them lip service like I just did. All of those reports are valuable reports that you can print out of Costpoint, but obviously there tends to be more that we want out of our reporting. And so when we move into hey, we want more, then we start looking at Costpoint's enterprise reporting, or SIR. And when we look at Costpoint's enterprise reporting, we see that there's different portals out there that have kind of already been pre-configured and delivered with the bundle. We see reports that have been developed with that bundle, and we also get frameworks and packages. So basically, a single reporting platform over a single source of truth for us to be able to report our information against. So some of the reports that we see out of CER is this. We see a project revenue summary with backlog. Okay, and we see that kind of come up right here on our project management portal. Always very useful tools to kind of see, where we are and how much we have left to get into the future. We obviously have a project status report. Project status report is nice because it has some drill-through functionality in here, which we don't get in Costpoint. So we can generate our project status reports. We can see what our revenue is, current period, year to date, and inception to date. We can see, we can compare that against budgets if we have that in Costpoint, and then we can drill down into transactions should we need to. So that's typically a staple report that we like to look at. We have labor utilization reports. Obviously, we want to maximize our most important resource, so we want to see how people are working towards, what our benchmarks are for utilization. We've got customer invoicing, because sometimes getting the invoice out of Costpoint is not really catered to exactly how our customer wants to see it. So we have some canned customer invoicing in CER, and obviously we have the ability to create other invoicing templates as necessary. We have a time and expense charging report, which taps into our Deltek time and expense data, and can show us, time by day, by person, by project, however we want to look at that, and expenses that are in our T&E environment. We've got our labor summary, which is nice because it has both posted and unposted hours. So here's where we have some business intelligence that stretches across two platforms. It'll bring us our again, what's been posted in Costpoint, as well as what we're still working on in T&E if we're kind of in the middle of the week and we haven't gotten, to submit, sign, submit, and approve, but we want to see how our hours are coming on our programs. Then we move on to CP Analytics. And CP Analytics so this is really a nice dashboarding tool to kind of get a holistic approach of things. CP Analytics comes with some pre-built dashboards. So right here, we're looking at a summary dashboard, which is kind of looking at the sort of organizational level of revenue and backlog and labor utilization and profit. But we also see things for projects at risk, and what our pipeline here is if we're using capture management. We'll notice that over on the left-hand side here, we have the ability to filter or drill into any particular organizational unit. And as you click into that, you can drill down further and further. And we have some nice display graphics here. And then we have some user options to identify what our defaults are for viewing data, so we don't have to configure each one separately. Let's take a look at their, what I'll call their program management dashboard. So within the program management dashboard, you'll see these these tabs going across the top: revenue, profit, backlog, AR and DSO, projects at risk. We have an ad hoc data discovery, and then the user options over here. So from the user options field, we can identify things like I want to see my data by period to date or year to date. I want to see my data by owning organization or performing organization, and then that kind of cascades across everything that we're looking at. We can select the organizational level that we want to see our information at, or we can see things by project type, by top-level PM, or by some lower-level project manager, by customer, or what have you. And then we can also take a look at things and filter on certain projects, and we can see that by project ID or project name or both. So what's nice about this is that it's interactive, so as you click on these particular fields, your information is continually being refreshed. because this information is actually sitting in really a high response data cube that is, so it's not tapping into a database every time you're flipping through things. It's already got the data ready to look at. So that's the revenue tab. And then we have the similar type of analysis that we can do on profit. Okay, so again, as we talked about the program finance professional, we have responsibilities to review revenue and make sure that's right. We have responsibilities to the bottom line to take a look at that. So we have to do our part in analyzing that information at the program level. Of course, backlog is important. We need to know how much we have left out there to spend. We need to make sure that we're spending it and we're maximizing what our revenue capabilities are. We want to know what our accounts receivables are out there and our DSO. More and more with program finance people, we're being asked to facilitate that collections process and so we tend to have relationships with our customers. So that becomes a big piece of what we do. Knowing what projects we have at risk is always important, right? So I want to know when I'm getting close to my funding threshold. If I need to, go back and get funding, I need to do something about that. Hopefully, really, what it means when we're getting close to our funding threshold is that we're also being close to being done. But I need to know that, right? So that we can take actions on that information. And then lastly, this last tab here is ad hoc discovery. And what's nice about this is it basically takes every data point that's available within this particular dashboard and allows you to pick and choose which ones you want to see. And then allows you to pick and choose what metrics you want to see across that same information. So you have sort of a baked-in query tool, but not really from a perspective of, I've got to go and build a production report like you would in CER. So that was a lot. So I've sat here and talked for a while, and we could forget, exactly why it is we were here in the first place. So we were here for a couple of reasons. We wanted to get some insights into some key practices, key best practices in areas like report and comply, measure and respond, plan and predict, procure and pay, but most importantly, project financial management. We wanted to understand what the latest best practices are, and we wanted to understand how we can adopt some of them or how we can adapt to them using the technology that we have today or the technology that's available to us so we can, again, have those standardized processes, have those and data to ensure a single source of truth and that we're all operating on the same page. So how can Deltek help? Well, number one, you can streamline your processes and procedures, as we saw earlier with Costpoint and Extensibility, and in conjunction with the custom signed save procedures and DTE, time and expense, to help us better manage our labor costs. So that helps us get to close faster, bill faster. We saw by changing our action rights and the adjustments to open billing detail, that unlocked a screen that we might not otherwise be able to access due to SOX and corporate governance compliance reasons. And we've taken out the middleman of, hey, I need to put transactions on hold or take them off hold. In plan and predict, we didn't talk about that, or we didn't really see anything specifically about that. But we know that there are best practices out there, and what we want to do is we want to have an enterprise planning and forecasting solution that allows us, again, to leverage the wisdom of crowds. Okay? Deltek has some tools available, like budgeting and planning, or Costpoint Enterprise Analytics, and there are other applications out there as well that can be looked at to provide that functionality. And lastly, we saw how CP Analytics gives us a single dashboard with drill-through analytics that combines information from Costpoint, time and expense, capture management, and other products into one streamlined portal. And again, it's back to giving us that, not only the single source of truth, but giving us high-quality data, high-quality information that we can use to make decisions. So why did we do all of this? Well, we did it because competition is fierce, as I said in the beginning, and competition will not stop. We did it because the Office of Finance, i.e. the CFO, will increasingly look upon program finance to unlock value in the organization. We did it because the demands of program finance professionals will continue to grow. They're not going away. And we did it because you want your organization to succeed, and so do we. So I did a lot of talking there. I really didn't think I would get to the 54-minute mark. I thought I was going to be a little bit faster there. So I'm going to take a look at some questions right now. Okay. So the first question I see is, where can we get more information on how to build these types of dashboard reports? I think what you need to take a look at, number one, is which applications that you have. If you're in the CER space, then the underlying architecture of that is your Cognos Business Intelligence platform. So hopefully you have a BI resources in-house that can help you with that. If not, what's nice about Deltek's model for delivering best-of-breed applications is that you do have a wealth of resources that are out on the market. And it's always good to find a resource that not only knows that particular tool, Cognos, but also knows the data source from which you're reporting from, be that Deltek, Costpoint, or time and expense, or what have you. Okay, let's see, what else do we have? Can SIR provide costed labor for unposted time? Yes. So with Cognos BI, you can actually create some reporting or business intelligence that will cost that labor out of T&E. Obviously, you would have to have some sort of metrics to, or logic to apply to that. I wouldn't say that it would be 100% perfect, but I think for the purposes of, hey, looking at midweek, kind of estimating where you are, it would probably be a good benchmark, but you would have to kind of get some business rules around that. What is the cost of maintaining these systems in terms of people? Do I need separate people for each of these areas? Good question. And I'd say the answer is probably yes. These different solutions come with different skill sets. The CP Analytics is based on ClickView. Again, ClickView is a product that is data agnostic, if you will. So there are other companies using other ERPs that use ClickView, so you can probably get that skill set out on the open market. It shouldn't be too hard to find and bring in-house. We talked about the BI stuff before, and if you guys are already Deltek users, then you have the Costpoint piece. Okay, well, we are at the 57-minute mark. Kim, I know you wanted to wrap up with a couple of things, so how about I turn it back over to you?
Thank you, and great job. So before we officially conclude, we want to remind everybody that all registered attendees will receive an on-demand recording of today's webinar within 24 hours via email, and if we didn't get to your question, we'll be sure to answer it offline. Also, we would appreciate if you filled out the short survey that you'll see at the conclusion of the webinar. And with that, I'd like to thank you for joining us today, and please visit deltek.com for more upcoming Deltek events. Hello, everyone. Thank you for joining us for today's webinar, Program Finance, How Deltek Solutions Help Project Controllers Manage Their Port. I'm Kim Woodcock, an events coordinator here at Deltek, and before we begin, I have a few administrative items to note. As audio streams through your computer speakers, all attendee lines are muted. However, if you have a question during the course of the webinar, just type it in the Q&A panel of your screen at any time, and we will be sure to address it at the end of the webinar as time permits, or follow up with you offline if we run out of time. There are resources, including the presentation slides, for you to download in the resources panel of your screen, and you will also receive the on-demand recording of this